Boom, we are pre-recorded, ladies and gentlemen. Oh, and we're excited to be here. It's Tuesday, not Monday. And wow, what a ride it has been. We've found Bitcoin consolidating around the $5,000 mark, testing its lower areas of support. We do suspect that Bitcoin will break down again to at least test the previous lows. One of the things about technical analysis is it gives us possibility, probability. I think the quote 0% certain with 100% possibility is one of the ways we like to look at this. Again, we're not married to an outcome. We look for statistical averages. That is the best way to win. For instance, you will never just buy the bottom and be able to sell the top all the time. So you might as well get used to making it in a band or a range of success. I found my life is actually much better off this way when I don't look for perfection, but I actually perceive what it is that I've created and those moments to be perfect. It's a kind of a hippie woo-woo type feeling and fundamental, but it does make a lot of sense. So we're going to look at Bitcoin again. Thank you all for those of you who signed up for the Private Bear Members Club. Over 300 of you in the first week alone. That was fantastic. Again, now what we just wanted to do is produce as much content. So we've hired writers. We produced the first chapter and working on the second of our ebook as well, called Non-Advice. So for all the Private Bear Den members, you can check your email, and as well as updates on Icon, ADA, and a few others were pushed out this morning. So please do check that. On the 4-hour chart on Bitcoin here, we've actually broken through our cloud and we're aiming towards the exponential moving average here, the 100-day. I do suspect that we're going to ride along this area, the 4,900, for a little bit longer. With that in mind, it makes the possibilities of some of our other trades really come to life. Now, one of the things I really like to do, and I do this often, especially when I'm looking for entries and exit points, is I try to zoom out and zoom back in. So for instance, if at the Bitcoin chart you roll into the 1 minute right now, you get this very chaotic experience watching the candles wick and boom up and down between breaks of support and resistance. And right now, as you can see, we're actually on one of the lower areas of support on our cloud here at around 5,062. And on our MACD strategy here, we're actually turning down. Again, we've got lowered volume, but this starts to look a little chaotic because when things change so often on the 1 minute, it's confusing and you can become irrational. Now, for those people that are looking for entries, one of the most important things I think you need to do is really look at the 1 minute, the 5 minute, the 15 minute, and get a direction of the overall trend. So for instance, if we zoom out here on the 15 minute, you can see that there's a lot more data that's been taken into place, where this is the recent bounce down, and we can see the wave that's been consolidating after that big flagpole that we had, and there's the flagpole up from the $4,900 area, and these top red lines represent the recent all-time highs on the 15-minute chart. This red line down the center here represents the basic average for support and resistance to the volume profile. Again, inside the visible range. A lot of this is all visible range trading tools, so your EMA will all change, your volume profile here, or mine does, all changes depending on the time frame that I roll out to. So here when we look at the 1 hour on Bitcoin, we see again that big flag, and there becomes less and less data. And then as you go out even further again to the 1 day, it just looks like a giant flag and pole with almost no flag coming off the pole whatsoever. So this is really what you want to do, is look into the depth of the chart that you're trying to, I guess, find stability in, right? So for instance, with Bitcoin, just don't even worry about buying and or selling. Just from an educational standpoint, look at how much data you can find by scrolling in and out here. So here again, we see the 50 and the 100-day exponential moving averages are actually quite a bit lower. So there's this big gap between the range that we've been riding on. I'll top this, I think this is the 10-day moving average. I'd have to double check on that, 5 or 10. And we're butting up on the average here on the daily at around 5,000. The next drop below that is 4,800, and between 4,800 and 4,400, and even actually a little lower, 4,280, there's not a whole lot holding us up. So for instance, again on the right-hand side, you see this big gap in the volume profile fill. As we scroll out, we'll actually get a little bit more data there to show that that gap is quite extensive, regardless of how much data is in the chart. See, so on the daily here, there's a big gap all the way down to the 4350 area. Now, this is the gap that we were looking to actually think we would fill with Bitcoin, was potentially all the way up to 58, 5900 to hit this first gap. And then again, retest down to the $4,300 area. If we consolidate within this area without breaking down, that's a positive sign. But for those of you that were here through the early parts of 2018 and the later parts of 2018, this consolidation area of the the $6,000 mark, we built actually a lot of support and filled this gap and still broke through it anyways. And as you can see, the previous gap and support around 61.45 and the one that we're just breaking out of now for around 4,400 to 4,000 is not bigger than the $6,000 range. So there's still a lot of evidence and mounting evidence that Bitcoin can go lower. Now again, once you break below the $3,800 line, there's not a lot holding us back between here and 2,200, and then between 2,200 and 14, 15, 1,300 is the next big fill. And as you can see, each of these, the one we broke down from $6,000 is actually more supportive than the one that's all the way down near 1,000. This is one of the reasons why I had made the operating assumption that there was a large possibility that we could end up this much lower. It's because any of the big boys want to see a really nice steady pattern of volume fill as we move out of this space. And I do believe we're going to need to fill this big kind of middle finger and this bottom lower gap here to make it out of this range effectively. That's my current assertion. Again, with our previous all-time high on the full time of data around $19,000. So this is a big area of conjecture. There's a lot of talk about, oh, well, the history of Bitcoin. You know, I think there's something to be said about the word history. History, in my mind, generally leans more towards the multi-decade response, or closer to the century response. So we don't have history for Bitcoin, but what we do have is a lot of other history in every other market. And regardless of if they're different in the way that they function, because I believe what we're charting here, more so than charting the averages of sentiment of value, is actually charting the sentiments of the growth of an exponential movement, not dissimilar, and I'll just actually one not, it's not dissimilar to that of the growth of information technology. I think a lot of people, myself included, have started to realize that this is not just money or currency. This is information technology, and information technology has moved with leaps and bounds when it does, because it's very much so not related to organic growth. It grows in exponential speeds, hence the ideas of how many microchip processors we can fit and how many that will grow to as time goes on. It doubles almost every year. This is called exponential growth. There are a few different ways to look at that type of growth structure. But anyways, the point of this is, I think we're charting more so the growth of information technology, which again is the reason why we had said at many points over the last few years that you could see Bitcoin easily going to $1 million and or higher, because this has a growth rate which we don't normally see in the regular market world. Now, again, the downside to all of these cryptocurrencies is at one point they could go to zero. Yes, that's true. Anything can. Fundamentally speaking, value itself is only a proposition of what the mind deems it to be worth, and that has no intrinsic value whatsoever, because it's not necessity. Necessity is related to the things that are there for your survival, and no one of us are particularly in that moment. And if, may God willing, we don't go back to a moment of where we need to go to survival, because we have seen these chaotic times in the past, and depending on where you live in the world, that might actually be the case. It's not all that fun to live through, but on the benefit, it does teach communities what's most valuable, because it brings the relationship back to the lines of survival. Anyways, that's my rant for Bitcoin. I do believe we're going to test the $4,400 area, and then from there probably test the $3,400 area. There is still room to go up to 6,000, but that's not a whole lot of upside considering the downside even to there. So the upside is an extra 16%, whereas the downside, even just to test our where we just were, is 16%. So you have an almost equivalent upside to downside projection right now. So I'm basically, at least with my trading stack, I'm out of the markets. We sold everything around 52.50, and we've been making some small plays that the Bear Den has been aware of. There's been 10% moves in Raven. Same with Litecoin. BCH yesterday, because of the delisting of BCH SV, was quite noticeable. Kind of funny here too. SBI, one of the Asian, or is it Japanese, I was right the first time, delists BCH and keeps BSV amid the major cryptocurrencies delisting BSV. So you saw major market volatility in the Bcash SV versus the Bcash token. They were actually almost inverse of each other, as Bcash SV fell, Bcash S regular, whatever. It's confusing and annoying. You both! Fuck Roger Ver and Mr. Wright. Anyways, defecation full of defecation, those two are, but that's not defamation. Anyways, I don't want to go too far. I want to keep this brief today. Again, one of the reasons why we chart on a daily basis is so you can get a calmer approach. As soon as you start to invest emotionally, you're going to make mistakes. One of the important things about, I guess, constantly coming back and in and out of the markets is that you get used to watching the growth and the, I guess, the inflation of some of this and then the deflation of these markets. So there are a few other tokens we're interested in. Obviously, let's take a really quick look at Litecoin and Ethereum because they're part of the market leaders, in my opinion. We're looking at them versus Bitcoin right now. Litecoin is actually is starting to make a potential really nice movement here. It's made a very nice cup and it looks like it's about to make the handle. So I'm watching Litecoin closely, at least on Bitcoin's chart, because it's made a multi-week cup and handle potential, and this to me is hugely inspiring. I do suspect we can see Litecoin come back down to the 14,000 Satoshi mark on that handle and then maybe making a further projection outwards. Again, this would be off the back of Bitcoin likely going to 5,600 to fill that gap. Again, 0% certain, 100% probability to everything that's on the table. Those probabilities change and diminish depending on each day. So Litecoin actually could be about to make a really nice play here, although as you can see, the MACD strategy is about to come down and touch the bottom. And then again, as you zoom into the multi-hour charts on things like Litecoin, you start to see a bit clear of the long-term picture. Again, okay, I'm gonna zoom this up here. We're down at the 2-hour now from the 1 day on Litecoin. Again, looking for a break below 15,000 Satoshis to come down and test the 11,000 Satoshi mark before potentially making that final extension on the cup and handle. Litecoin has had a lot of support and resistance on that area on the multi-month chart too as well. If you scroll out and look at the multi-month of, actually let's look at it from a weekly, it'll probably be a little more clearer here. Yeah, if you look at the multi-week chart from Litecoin since early 2013, you can see that there's a lot of support and resistance coming right out top of this area. And then again, there's actually another budding area of support and resistance right here, just above there, and the extra wicks that had been taken out of the years. Again, this is all relative to Bitcoin and only the price I care about. I believe most traders in this market will continue only to care about their Bitcoin stack, especially when they see Bitcoin start to breach $1 million somewhere near 2022, 2023. That's my guess. Time frame wise, just a guess. Not financial advice. This is a crystal bear ball. Crystal bear ball. Anyways, I say some ridiculous shit here. This is Teal with the Arcane Bear. I'm going to take no look at Ethereum because I believe it's not in a less exciting spot. As we had said, when the last time Ethereum was up at $380, we suspected that anywhere between 60 and 40 was likely. We came down, touched that 60, or so we touched that $80 mark. Everyone said, "Oh, you didn't go to 60." It's like, man, we are close. So close. That's what I said. You never can call the bottom or the top exactly, and you don't want to. You build a range of staggered entries and exits, so you have a nice, cool, calm, respected emotional entry and exit plan that's created for your strategy, so you can invest in whatever the hell it is that you want to do with the rest of your life, because that's the only point to having economic energy, is so that you can find ways to entertain yourself. This is Teal with the Arcane Bear. I'm signing off for the rest of the day. Thank you, Bear family. Smash that thumbs up if you like this content. If you don't, smash that thumbs down button, because YouTube don't give no shits what you do. As long as you like it or dislike it, YouTube is happy to have you here, and so am I. Leave your comments, your thoughts down below. Sign up for the Bear Club if you want. Don't. It's going to get more expensive the next time we fill up this gap, so there's only 200 more spots left at that. I do suspect we'll get to probably 1,000 signups over the next few months, and I'm very grateful for all of you that support the Bear family. Again, we're just creating more content with that energy. You know, all the Bear family admins, you can see them doubling down. Again, thank you to all the Bear admins. You guys do so much great work together. And all the supportive members who jump in and are learning and also help teach while they're learning. I know a lot of people have a hard time, "Oh, I'm the best. Why would I ever want to show you my skills?" It's actually great to stop, to slow down, to help people. The process of actually relearning something very simple like, hey, what's a candle wick, can be very valuable to everyone that's involved, especially if you're an advanced trader. Coming back, I mean, as a musician, coming back down to that basic level always helps me learn a heck of a lot more about what it is that I'm doing. Anyways, this is Teal with the Arcane Bear. I'm signing off for the rest of the day. Bloop, 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 bloop.